Hello, everyone. This is Sunko, the Korean bro, and I'm back. Hmm. Okay. Today is 2022, March 15. I remember the day when I started YouTube Live. It was like 6 months ago, or more than 6 months, and time flies indeed. And of course, I do this from time to time, but what's important is that I keep putting an effort into it so that uh, I don't lose. So I can concentrate on what I really want to do at the end. So my ultimate goal is to go out there and speak in front of a lot of people with the software that I made. Uh, I want to be like uh like public speaker who can talk about software, of course, in English to people world out there. Uh, so that's my ultimate goal. So for that, if I want to achieve that goal, even if it's a bit, uh, so I don't get like straight away. I can just focus on the specific goal. So, mm, oh, I'm like really not talking well, obviously, because it's been a long time since I spoke English last time, and like I'm not really a good speaker because everything that I say is not organized, or it just randomly, the words randomly come out from my mouth. Uh, but this random words means something, because if I don't speak anything at all, nothing happens. So I still feel that it's worth it. The word that I blah still worth it. Anyway, last time I checked, stock was like a week ago. A lot of things happened. I happened to have corona. I was infected, but now I'm all over it. Like I'm officially, I'm I'm perfectly fine. Uh, I had a really like terrible like throat ache. Well, not like everything else besides throat ache were all good. Like I mean, I had no problem with my nose, or I had no sweat, or like I had no headache, but uh, like I had my terrible throat ache. Like at some time, like I felt even hard time breathing, but now I'm really okay. I don't even cough at all. Like so. Anyway, hmm, I'm all good. So let's get back to stock article and see what's been up with these lately. Uh, I didn't have much time and I didn't have much energy to look up on this chart. Let's see what's really happening. I know because of crisis between Ukraine and Russia, things are not going well, and like downward trend is gonna go for a while. But but I just gotta look into it, right? Hmm. To see what's really happening and see what I can do. Hmm. All right. Hmm. a lot of things are going down recently. I mean, even the firm holdings is down by 15%. Mm. Skills is down by 8%. And all the just so you know, all the list of companies that I put on my portfolio are good ones. It's not bad ones. It's going downtrend just because of like what is it? Crisis between Ukraine, Russia, and the rising interest rates and like stuff like that. You know, geopolitical tension. Uh, for that reasons, I believe it's going down overall. Even Teladoc Health, the one that I really think it's worth giving a shot, is going down and down and down. Uh, hmm. Will Teladoc ever top $200 again? Let's look at this one. 10 famous tech stocks are bargain today. Even it's listed as top 10 famous tech stocks. Top 10, 3 top growth stocks I'd buy right now without any hesitation. 5 growth stocks they can turn $250,000 into $1 billion by 2030. See, its revenue is increasing rapidly, but then its price is going down. How companies like ㅅtalking successfully adapted during the pandemic. 7 Kathy Wood stocks are worth buying March. We'll briefly go over this first, and then we'll go on to read the article next. Teladoc shares have dropped 78% from their peak in 2020. At the same time, revenue and online medical visits have growth in the double digits. The pandemic gave Teladoc Health a big boost. That's because so many people favored online medical visits. So the company's revenue, visits, and share price took off. Since those early days of the pandemic, revenue and visits continued to climb, but share price story hasn't been so bright. Teladoc has fallen 78% from its peak of $249 back in August of 2020. In fact, today it's trading lower than Wall Street's most pessimistic share price forecast. What's the problem? Some investors worry about an eventual slowdown in growth once the pandemic is over. Another concern is competition. As a result, it's logical to wonder if Teladoc ever will top $200 again. Let's take a look at a few clues and try to find the answer. What's held Teladoc back? First, let's consider the concerns that have held back Teladoc's performance in recent times. It's true that the early days of the pandemic offered Teladoc an extraordinary lift. For instance, revenue visits climbed in the triple digits as lockdowns eased and business returned to normal. Their growth dropped into the double digits. But here's an important element to note. The company has maintained those double-digit gains through these times when people have returned to their usual routines, and Teladoc has even grown key metrics such as membership numbers and revenue per number. In the fourth quarter, revenue and visits climbed 45%. Mercado Libre, Teladoc Health. Okay, there you go. Teladoc Health. I invested a lot into Teladoc Health. There's an important element. The company has maintained those double-digit gains through these times when people have returned to their usual routine. Double-digit gained double-digit gains. Through these times when people have returned to their usual routines. And Holiday has even grown key metrics such as membership numbers, revenue per member. In the fourth quarter, revenue visits climbed 45% and 41%, respectively. US paid members increased 6.6% to paid members increase. Paid members visits. Paid members increased. Increase and average revenue per number in the US rose 53%. Average revenue per number. Average revenue per member. Here's why this is particularly significant. Telus says gains in members and revenue per member will help it achieve its 2024 revenue goal. And that's a goal of more than $4 billion in annual revenue. Now let's take a look at competition. Telus faces rivals such as American Wealth, competition, American Wealth, and more recently Amazon. But comments from Teladoc management have been encouraging. In the fourth quarter earnings call, CEO Jason said Teladoc beat out the rival for a deal to launch a virtual health plan with a big organization in the Midwest. Virtual health plan. Virtual health plan. Virtual health plan. Virtual health plan with a big organization in the Midwest. Midwest also has frequently mentioned Teladoc's whole person care as an element that helps it maintain leadership. Maintain Teladoc's whole person care. Whole person care. Oh my god. So we've talked about the main concerns. Hmm. Talked about the main concerns that have held back Teladoc's stock performance, and it looks as if wars may be overdone. Now let's move on to Teladoc's prospects. The global telehealth market, at a compound annual growth rate of more than 36%, is expected to reach $787.4 billion by 2028. 60% of consumers express interest in a virtual plan. Has made progress, as I mentioned above, on growing members and revenue per member, and that's likely to continue. Today, about 92 million US lives has access to a Teladoc product. That's out of a total of 298 million US insured lives. So there's room to grow. Yeah, about 92 million US lives has access to Teladoc product, and those with product access don't have access to all Teladoc products. For instance, 35% have access to mental health telemedicine. That means there is room for growth within the current membership base too. Teladoc has a solid track record of bringing members into multiple products. For example, the percentage of individuals enrolled in more than one chronic care program doubled in the fourth quarter year over year. Let's move on to stock price. Teladoc shares haven't reflected any of the positive points above. So far this year, they've lost 40%. They're trading a little more than 4 times sales. This is their lowest by that measure since 2016. It's impossible to predict when Teladoc will rebound, but considering business today and future potential, the stock looks cheap today. Will it top $200 again? Wall Street's most bullish analysts think so. Highest 12-month share price forecast is $215. I'm not convinced Teladoc will get there in just a year. It may take a while for investors to come back to the stock, but I'm optimistic Teladoc will get there, maybe further over the long term. And that's why it's a great stock to buy now at this dirt cheap price. Okay, I get it. Okay. The S&P 500 hit a death crash. What's good news for the stock market? Panic selling grips Chinese stocks. Is people stuck about right now after hitting a 52-week low? Oil force over 5% on Russia-Ukraine talk host. Remember the stock market before the war in Ukraine? JP Morgan said negativity is overblown. Offers for hedges. Investors see risk spiking, fear market-wide liquidity crunch. Ukraine war likely has triggered a lasting bear market. Kramer's mad money. For Dutch province Ukraine war is a call to pump natural gas. Growth that lead Wall Street to lower close as investors focus on interest rates. Relentless selling in China stocks. US stocks are on sale right now. Strategies. Older American head back to the workforce amid inflation and the volatile stocks. Investing versus gambling. Is the biggest bank stock buy cap market as actually to half its reserves, finance minister says. Tough choices. Has tumbled. Here's why Morgan Stanley isn't bullish. These are the 12 worst bear market tech stocks you can own. Kathy would watch ARK 6 to 3D print investing profits. Okay, this is about it. Now let's go over to Market Beat and let's see what it says about the stock these days. Volatile Chinese virus cases climb, raise threat of trade disruption. 3 hot energy stocks with more in the tank. London Metal Exchange resumed nickel trade at 3 dividend aristocrat to buy 3 hot energy stocks with more in the tank. You might have missed out with upside. Palm stock is up. Buy the deploy. It may be the time to reassess the risk and reward of innovation stocks. 3 attractive stocks with PE ratio under 10. International stocks to buy now. 3 dividend. Tech stocks to buy and hold. Okay. Podmatic stocks to buy the deploy. Digital advertising technology platform Podmatic has fallen below its pandemic low, accelerated by the macro market sell-off. The digital advertising supply chain platform as a service provider has doubled its sales in the past 2 years to turn profitable and expects 35% adjusted EBITDA margins for fiscal 2022. The tailwinds continue to accelerate for Podmatic as the digital advertising market grew nearly double pre-pandemic levels to 31% in 2021. Popmatic. No, it's 4% down today. Okay. The tailwinds continue to accelerate for Popmatic as digital advertising market grew nearly double. Expected to be permanent, not transitory. E-commerce is expected to grow 70% annually for the next 4 years, driven by online grocery shopping adoption by consumers. The addressable market for advertising continues to expand as a closed television business has grown 6 times, processing 9 trillion impressions for full year 2021. Mixed guidance estimates, conference call takeaways. Okay, the author is looking at it and what can I say? Chart pattern analyze view. 3 international stocks right now. Keep an eye on these 3 international stocks: Petrolo Brasileiro, British American Tobacco, and Toronto Dominion Bank. Okay, next. These 3 tech stocks could be great core holdings. Buy and hold investing can be one of the best ways to grow your wealth over time if you possess patience and are okay with the idea of holding through some drawdowns over the years. This investment strategy is attractive for quite a few reasons, as it doesn't require spending a lot of time actively managing a portfolio. It can help you save on taxes thanks to long-term capital gains. It's very easy to implement. With the market pulling back sharply to start the year, investors that have been waiting to add shares of the top stocks during a correction should be getting very excited to go shopping for new positions. Have been hit extremely hard in 2022 and could offer attractive long-term entry points for buy and hold investors to consider. Focusing on financially stable tech stocks with a combination of compelling products and services and the potential for continued earnings growth can really generate some great alpha for accounts. Many of the biggest technology companies could just be getting started in terms of their growth potential and innovation, which means that holding on shares over years could be a very wise decision. Apple, Alphabet, Amazon. This year, the it is now trading at a scarcely low level. They usually presents an attractive opportunity for longer-term investors. Paladin stock has tumbled. Here's why Morgan Stanley isn't bullish. Oh, come on. Let's see. FS Energy, Adobe. For tech investors, ignore the pain in this sector anymore. Giants are getting dragged down. 12 information technology stocks in the S&P 500, including S&P 500 members, but PayPal, FS Energy, and Adobe are now down 60% or more from the time Nasdaq Composite peaked and started falling into the bear market on November 20, 2021. PayPal Holdings, Wall stocks in the worst stocks in this tech bear so far. EPAM Systems. EPAM Systems, a PayPal lab person, Digital Turbine, 3D Systems, Calyx, Autodesk, 3D systems. I believe this is on my watch list too, DDD. Mm. Kathy would watch R6 to 3D printing investing profits. Oh. Wood's Org Investment Management continues its buying and selling of market, mostly buying. Investment star Kathy Wood, chief executive of Org Investment Management, continues her buying and selling of stocks, mostly buying, amid the equities market turmoil. On Friday, she ventured in 3D printer companies, snagging strategies SSYS Guest Strategy out report in the Velo 3D Ors continue its foray into biotechnology stocks, purchasing Adaptive Biotechnologies to get Adaptive Biotechnology Corp. Shopify, DocuSign. GitLab stock rallies more than 10% on strong results outlook. GitLab, it's one that I use, so. Oh, come on. I cannot read this article too. Okay, let's read this one. In this article, we will discuss the 10 famous tech stocks at the box. So take a look at some more stocks that are trading today and the latest market situation as of March 14. The specter of soaring inflation, rising interest rates, and disappointing quarterly reports have all combined to push a massive sell-off in the technology sector over the past few weeks. The tech-heavy Nasdaq Composite has registered a double-digit drop year to date, after falling towards the back end of last year as well. A slew of technology stocks have thus lost value in 2022 and are now trading at prices that growth investors Kathy Wood of Org Investment Management has described as deep value territory. Some of the top tech stocks that investors can buy at the bargain today include Snowflake, Zoom Video Communications, RingCentral, among others discussed in detail below. However, Bank of America analysts have the note to investors in late February has cautioned that it was important to be selective when identifying winners of this crash, noting they took the tech sector over a decade to recover from the dot-com crash at the turn of the millennium. Okay. The companies that operate in the technology sector have registered a more than 10% decline in share over the past month were selected for the list. The analyst ratings and business fundamentals of each company were also considered. Number of hedge funds that hold stakes in each firm. Zillow Group. Nasdaq is that digital real estate firm. Hedge funds have been offloading the stock in recent months. Digital real estate firm. Price target to Ring Central. What is Ring Central? Stocks that growth investors are flocking to. Ring Central. Zillow Group operates a leading U.S. real estate sites, a mortgage marketplace, and the Zillow offers home buying business. Shares fell during the quarter in concert with the broader rotation out of technology-based stocks, despite the company's continued inflection in mortgage revenue, strong profitability in its core business, and a positive real estate outlook as Zillow Group Inc. builds out its buying ecosystem. In our view, Zillow Group is a leader in the large online real estate advertising market with substantial upside from mortgage and offers. With substantial upside, and we remain investors. Paycom Software, Paycom Software, PAYC. Paycom Software provides cloud-based human capital management solutions. On February 9, the division capped the buy rating on stock and raised the price target to $420 from $385. Noting the firm was an efficient long-term secular share gainer in the payroll space. Paycom Software is a cloud-based SaaS provider for human capital management. It's simple yet innovative single-instance software initially targets small and medium-sized businesses, and it is being adopted widely. Paycom Software has a highly repeatable sales process driven by more than 90% customer retention and a solid track record for selling more to existing customers while acquiring new users. We also like Paycom's founder CEO and his impressive track record for value creating reinvestment. Despite the challenges created by the pandemic, revenue grew 14% in the fourth quarter and for 2020. We believe Paycom Software Inc. is well positioned to benefit from digital transformation as more corporate functions move to the cloud. Datadog, DDOG. We also add to Datadog shares to Datadog Inc. retreating quarter first in sympathy with the broader information technology sector. However, the company remains on solid fundamental footing, recently setting a quarterly record for net new customer additions. Datadog Cloud Solutions fill a void left by legacy tools built for on-premise IT infrastructures, enabling it to take share in an under-penetrated, large addressable market. We believe the company's low-touch and expand customer acquisition model, combined with a steady expanding product portfolio. Vitality Health, PayPal Holdings. Um, let's go over to 5 famous tech stocks at the bargain today. Stitch Fix. Three top growth stocks by right now without any hesitation. Intuitive Surgical stands out in my view as an ideal growth stock to buy even during these tumultuous times. The company is the undisputed leader in the robotic surgery market, and the market's cloud have explosive growth potential. Wow, wow, wow. Since intuitive Da Vinci system was launched in 2000, more than 10 million procedures have been performed. With robotic assistance, over 1.5 million of those procedures were performed worldwide last year. But consider that more than 48 million surgical procedures are done each year in the US alone. This volume should increase over the next few decades due to an aging population. Another growth stock that's in the early innings of capitalizing on its opportunity. The company ranks as a leader in the Latin American e-commerce market and is sometimes referred to as the Amazon.com of Latin America. Just how big is market delivery opportunity? In 2021, the e-commerce penetration rate in Latin America was around 9%. It's expected to jump to 16% by 2025 and continue rising after that. Fintech stocks, the company's Mercado Pago digital payment platform is shaking up the status quo in Latin America, where many people don't use traditional banking services. Teladoc Health. Few sell-offs have been more overdone than that of Teladoc Health. In my opinion, shares of the virtual core care provider have plunged more than 70% since the first quarter of 2021, but Teladoc continues to have exceptionally strong growth prospects. How companies like Chipotle successfully adapted during the pandemic. Today marks the second anniversary of the World Health Organization declaring COVID-19 a pandemic, and no doubt about it, a lot has changed since then for investors and corporate America. Let's dive into the changes within companies. TK, your editor and a friend of the show, Sam Rowe, joins us now. Sam, always good to see you here. What has been perhaps the biggest change inside of companies over the past 2 years? And Kathy Wood, worth buying Mercado Libre, Roku, Spotify technology. Unity Software, Vertex Pharmaceuticals. There's Spotify technology, Path. Unity Software, Vertex Pharmaceuticals, biotech stocks could boom or bust in. Okay, now let's go over to Teladoc Health. Let's dive deep into it. Teladoc Health. Despite sharing, stock hasn't performed well lately, but its business continues to get stronger. getting more members and money out of each membership. More members, getting money out of its membership. Will lead to more revenue growth. Unprofitability remains an addressable concern. Unprofitable remains an unaddressable concern. A lot of things are going right, but there's still one troublesome factor. Despite its shares losing more than 67% of their value over the last 12 months, there are at least a few reasons to still be interested in buying Teladoc Health. Company continual investment in its platform continues to pay off, and it's definitely one of the leaders in the quickly evolving space. If investors are intimidated by its recent abysmal performance, let's think about 3 reasons why there's still a bull case for Teladoc on, and then conclude by also entertaining a big reason to consider selling. Per member is rising rapidly. Revenue per member is rising rapidly. The first reason Teladoc might be worth buying is that it's making more income per subscriber than ever before. Last year, each member in the US brought in an average of $2.49 in revenue, an increase of 52% over 2020's average. That was made possible by members increasing their utilization of company's Teladoc services. Its total number of visits increased by 38% year over year. Year over year, reaching 15.3 million by the end of 2021. New programs like its Primary 360 primary care service are crucial when it comes to enticing existing subscribers to initiate more telehealth visits. Primary 360 is aimed as an alternative to the in-person primary care experience. And members enrolled in it are 15% more likely to use another teledoc service. In members and members enrolled in it are 15% more likely to use other teledoc service. Members enrolled in it. As a result of referral from an affiliated practitioner, of course, moving forward, expect Primary 360 to keep being a major driver of increasing revenue per member as the business adds support for more specialties and care integration schemes. It's projecting growth through at least 2024. Over the next few years, Teladoc probably won't wow investors as it did with its wild run-up in 2020 and 2021. But it's planning to deliver faster than average growth to Nautilus, and that's another reason its shares could be worth picking up. Management expects that the base of subscribers will grow modestly by up to 5% per year. But thanks to ongoing efforts to juice more cash from each person using the service, it also expects to be able to grow its revenue at a compound annual rate of at least 25% per year through 2024. Revenue at a compound annual rate of at least 25%. year per year through 2024. That will leave it with more than $4 billion in inflows in 2024 compared to 2021's total revenue of just over $2 billion. So these projections are reasonable. The deceleration of growth to reach maybe a more sustainable rate than the blast off of the recent past. But still, some people are still concerned about its upside potential. And let me tell you the disadvantages of what people think. Um, but can it become profitable? It's what people think. Some of people think, despite these reasons to buy Teladoc stock, there's also one reason to sell it. If it isn't profitable, and it isn't clearly making sustained progress toward profitability over time, its gross margin under generally accepted accounting principles was 67.2% in 2021. But 2020 was an especially 방송. But investors who are more interested in stability and growth potential, lack of near-term profitability might be a deal breaker. In terms of industry wide tailwinds, Teladoc benefits immensely from consumers' tendencies to appreciate some of the benefits telehealth offers, in contrast to traditional in-person healthcare visits. Per research acquisition by the company, 82% of people think telehealth is at least as good as in-person care options. Okay, it's as good as in-person care options. Is at least as good as in-person care options. And 60% of consumers are at least open to the possibility of virtual healthcare plan. 60%. Meaning that Teladoc's total addressable market is absolutely gargantuan. Addressable market. Plus, both of those pieces of information bode well for business attempts to expand its offerings into medical specialties and chronic care management. Attempts to expand its offerings to medical specialties, chronic care management. Furthermore, as Teladoc finds new ways to integrate medical sensors into its telehealth services, its pitch to consumers will be more appealing. Expand its offerings. Okay, people are buy. In terms of telehealth. And what do we have? Telehealth. Health, Palo Interactive. Wix.com. Marco du Libre. I believe I did PayPal Holdings, Upstart Holdings. Fever International. Three top tech stocks to buy in March. Year to date, Nasdaq comp is down 16.4%. Many of the biggest tech stock names are down even more. Okay, let's read three articles. Wow, this revenue is increasing rapidly. PayPal's strong results have been obscured by near-term challenges. Fiverr is the leader in the gig economy marketplace. Twilio is producing strong growth and is the cheapest it's ever been. PayPal Holdings, Fiverr International, and Twilio. Okay. Twilio with upside potential. So much upside potential, okay? Let's read Twilio first, and then we'll go to Fiverr International, okay? Uh, so far in 2022, tech stocks have taken a beating year to date, and the Nasdaq Composite is down 16.4%, and many of the biggest tech stock names are down even more. Yes. On the bright side, some great tech stocks are significantly less expensive now than they were a few short months ago. Hmm. Okay. For three companies in particular, recent reported earnings further confirm their positions of strength in their respective industries, making them my top 10 tech stocks to buy in March. Let's dig in to see why. PayPal Holdings. Twilio is a leading cloud communication platform. If you've ever communicated with a Lyft driver or received a text message from an Airbnb host, you've used Twilio's products. Hmm. Twilio's revenue grew 61% year over year, continuing a trend that has resulted in a compound annual growth rate of 59% since 2016. Over the past 2 years, year over year quarterly revenue growth has never dropped below 34%. Ended the year with 256,000 active customer accounts, up from 221,000 at the end of 2020. These accounts are all spending more on the platform. Twilio's dollar-based net expansion rate, which tells us how much more a cohort is expanding compared to the previous year, hasn't dropped below 125% in the past 2 years. One area where Twilio has yet to make progress is profitability. This isn't uncommon for companies in growth mode, but eventually investors want to see steps toward becoming profitable. In the quarter four earnings call, management stated they expect 2022 to be the last year Twilio will generate non-GAAP operating loss. The company will still be prioritizing growth, but management feels they have enough scale and can become more efficient in their operations. With strong past performance and management that sees light at the end of the tunnel to profitability, there are many reasons to consider buying Twilio shares. One more reason is that Twilio is trading at a PS of 9, near the lowest that multiple has ever been. Shares have almost never been this expensive, making Twilio a very attractive tech stock to buy in March. And let's go over to Fever International. Is at the forefront of the changing landscape of employment. Forefront. As the gig economy continues to grow, gig economy, Fiverr offers a platform that helps connect freelance workers with those looking to hire them. Freelancers. Fiverr's recently reported earnings show its position of strength in this market. Revenues grew 57% year over year, 57%. Year over year, and 178% over the past 2 years. And already healthy gross margin increased 10 basis points to 82.6%. More important for investors to consider Fiverr's user metrics. 2021 ended with 4.2 million active buyers on the platform, up from 3.4 million at the end of 2020. Active users. Spend per buyer rose 18% year over year, and the take rate increased 29%. Spend per buyer rose 18% year over year, and the take rate this take rate is significantly higher than Upwork, Fiverr's main competitor, which has a take rate of 13%. Take rate increased 29%. Fiverr's main competitor, which has a take rate of 13%. Fiverr is able to attract buyers and sellers of geek work while profiting nicely from its ability to facilitate those connections. Much like PayPal, Fiverr's stock has been hit hard over the past year, uh, and is trading down 74.4% from its 52-week high. Its price to sales ratio stands at 9, which means Fiverr trades for same multiple D 2 years ago. Two beaten down growth stocks that billionaires are buying. Fiverr is a gateway to the rapidly growing gig economy, connecting buyers and sellers of digital service. Twilio democratizes communications for developers, helping them build engaging applications. Can be but mimicking success with investors is a great place to start. Fortunately, every quarter, institutional money managers are required to disclose their equity holdings in a Form 13F filed with the Securities and Exchange Commission. That gives retail investors a chance to see how so-called smart money is moving in the market. Find something appealing about Fever and Twilio. So let's take a closer look at both businesses. Cornerstone of the gig economy, it connects buyers and sellers of digital services. And its ever-growing geek catalog now spans 550 categories across 9 verticals, including trendy jobs like web development, data analytics, and digital marketing. On the seller side, Fever helps freelancers build a portfolio and market their skills, and it's provide value-added solutions like task management platform, Fever Workspace, and training content through Fever Learn. On the buyer side, Fever connects businesses with a global talent pool, leaning on an artificial intelligence to make relevant suggestions and accelerate the search process. Fueled by changing workforce dynamics, e-commerce transaction volume rose 70%. Okay, this is about it. I'm thinking of buying a Twilio when I get the chance next time. Okay, this is it, and I'll see you guys tomorrow. Okay.